Financial market. Financial markets are markets where buyers and sellers come together to trade financial assets. Mainly, there are 7 types of financial markets. Number 1, stock market. Number 2, bond market. Number 3, money market. Number 4, derivative market. Number 5, Forex market. Number 6, commodities market. Number 7, cryptocurrency market. The stock market is a financial market where stocks or shares of publicly traded companies are bought and sold. 5 financial instruments of stock market are: Number 1, stocks. Stocks represent ownership in a company and are bought and sold. Number 2, exchange-traded funds, ETFs. ETFs are investment funds that track a basket of stocks or other financial assets. Number 3, options. Options are contracts that give investors the right but not the obligation to buy or sell a stock at a predetermined price within a certain time frame. Number 4, futures. Futures contracts are agreements to buy or sell a financial asset, such as a stock or commodity, at a predetermined price on a specific future date. Number 5, mutual funds. Mutual funds are investment funds that pool money from multiple investors to purchase a diversified portfolio of financial assets. The bond market is a financial market where investors can buy and sell debt securities, known as bonds, issued by governments, corporations, and other entities. Bonds are a type of fixed income security that pays investors a fixed or variable interest rate over a specified period of time and returns the principal amount at maturity. There are several types of bonds that investors can trade in the bond market, including: Number 1, government bonds. These are issued by governments to fund public projects and initiatives, such as infrastructure development or social welfare programs. Number 2, corporate bonds. These are issued by corporations to raise capital for their operations or expansion. Number 3, municipal bonds. These are issued by state and local governments to fund public projects, such as schools or highways. Number 4, asset-backed securities. These are bonds that are backed by a pool of underlying assets, such as mortgages or car loans. Number 5, high-yield bonds. Also known as junk bonds, these are issued by companies with a lower credit rating and offer higher yields to compensate for the increased risk. The money market is a segment of the financial market where short-term financial instruments are traded. It is primarily used by businesses, banks, and governments to manage their short-term funding needs. Some of the most common financial instruments in the money markets are: Number 1, treasury bills. These are short-term debt securities issued by the government that mature in less than 1 year. Number 2, commercial paper. Commercial paper is a short-term debt instrument issued by corporations to finance their short-term funding needs. Number 3, certificates of deposit. Certificates of deposit are short-term deposits issued by banks and other financial institutions. Number 4, repurchase agreements. Repurchase agreements, or repos, are short-term loans backed by collateral. Number 5, money market funds. Money market funds are mutual funds that invest in short-term, low-risk financial instruments. The Forex market, also known as the foreign exchange market, is the largest financial market in the world, with trillions of dollars worth of currencies traded daily. It is a decentralized market where currencies are bought and sold, with transactions taking place over the counter, OTC, through a network of banks, brokers, and other financial institutions. Here are some of the key financial instruments traded in the Forex market. Number 1, currency pairs. A currency pair represents the exchange rate between currencies, such as EUR-USD, GBP-USD, and USD-JPY. Number 2, spot contracts. A spot contract is an agreement to buy or sell a currency at the current exchange rate, with settlement usually taking place within 2 business days. Number 3, forward contracts. A forward contract is an agreement to buy or sell a currency at a future date and a predetermined exchange rate. Number 4, futures contracts. A futures contract is a standardized contract to buy or sell a currency at a future date and a predetermined price. Number 5, options contracts. An options contract is a contract that gives the holder the right, but not the obligation, to buy or sell a currency at a predetermined price on or before a specific date. Number 6, swaps. A swap is a financial contract in which two parties agree to exchange cash flows based on a notional amount and a predetermined interest rate. Number 7, CFDs, contracts for difference. CFDs are derivative products that allow traders to speculate on the price movements of financial instruments, such as currency pairs, without actually owning the underlying asset.